Welcome to both of you. Mark, some thoughts on this rally today?
Yeah, we should all be pretty excited with market over 700, but there's a lot to be excited about. Going into the holiday season, historically great for the markets. Malls are packed, and we were able to shore up those supply chains by having 24-hour round-the-clock service all these ports. And so the U.S. consumer is strong because they bailed us out before. They've got the cash to do it. In fact, we U.S. Citizens have more in their bank account than they've ever had in American history. And this is the first holiday season in 2 years that they're able to go out, see their loved ones, and feel comfortable about that. And I think a lot of them are going to buy and make up for past years. So,
Michael,
very confident about the markets, and I think that you're seeing that today.
Yeah, and you've been saying that, Mark, for some time, that you're extremely bullish. Michael, let me turn to you. Where does this leave the Fed? We have many indications, press reports and otherwise, that they're seeing the world that Mark is describing and going, okay, maybe it's time to hasten the taper. The 10-year, I mean, 1.39%, are you in the camp, obviously, that thinks it's going higher, but also, is that why we're seeing NASDAQ underperformance today on a day that otherwise we have a lot of pretty bullish signs?
Well, there's a lot to unpack there, Kelly, but no, yes, I think the answer is yes. Powell's comments last week were pretty earth-shattering, if you will, changing that definition that, using the word transitory. No surprise to us. We've never believed it was transitory. We think some of it is, but not all of it is. And real inflation is probably going to settle 3 or 4% when everything settles down. So if you believe that that's the case, then what you're seeing is this sort of macro move that I think one reason why we saw a lot of volatility last week and why we are seeing what Dom noted earlier, a move to cyclicals, growth-oriented trades, et cetera, at the expense of the high multiple, previously high-flying types of stocks. Now, whether this is sustainable or not, who knows? We've seen these rotations, on and off for the last couple of years. But it would be indicative of potentially a higher rate environment and more of an economic growth story.
Yeah. Is this the end of the Omicron scare, Mark? Let's show again what's happening here this afternoon. Since 12 p.m., the Dow is levitating at the same time that the 10-year, as I mentioned a moment ago, it was at 139 about 90 minutes ago. We're up at 142.
Yeah, I think that folks are tired of the variance, and they're showing that by not really caring about what's being reported on Omicron. And that's a lot of reasons for that, because the vaccines are in a lot of folks' hands, and if you've got a lot of different medicines out there to fix possible issues that come out with a variant. And so I think that, yeah, you're definitely seeing that folks are moving on from this. But what remains to be seen is how quickly Powell's going to react to inflation. And I think that's the big unknown. If he is going to be aggressive in going ahead and raising rates, I think we have a lot less to be worried about, but the markets may not be ready for it. And so that's where we're getting a lot of volatility, this back and forth in the markets over the last few months.